Hey, what's good, YouTube? This is Chris Hendricks. Today we'll have a quick video on NASDAQ, basically. So, yeah, let's get straight into it. So, you know how we had CPI and NASDAQ was just buying. But today we have a new predicament. It's Sunday. This video will go up later today, hopefully before Monday. But you can see we're having these nice highs, but then if we go to the daily time frame, you can see we're nearly close to the previous high, like the highest. So I'm just gonna highlight this area because now there might be a possibility that NASDAQ buys and continue pushing up until that high or even break that high. So this high gives us some kind of information on where the market might be heading. So let's scale down to the 4-hour time frame and see what structures we have currently. So previously, right before CPI, we had this nice bullish correction where you could have, had something like this, your resistance, your support, and on your support you basically have this touch right here, this touch, and this one as well. But to simplify it, you could have done so many things with this one, to be honest. You could have done it like that, or however you feel comfortable doing it, but as long as you have 3 decent touches on your trend line. But this looks more decent because we need an average, not an average, but approximately 3 touches so that we can scale with the third touch because it has the highest probability. So we have 3 touches right here. This is our third touch, and this is what we had focused on. So basically, when you're at a third touch, all you need to know is rejections within the third touch and just a change of direction. Whether in this case it's a buy, so we'd want to see bullish candlesticks from that point. From the point of the market giving us rejections or reversal candlesticks, we need 2 bullish candlesticks for us to enter the trade for a buy. But anyways, this was a long time ago. Market bought, and then around these areas we had another correction. So basically the market moves in 2 phases: impulse, correction, impulse, correction, impulse. Same thing as the sell: impulse, correction, impulse, correction, impulse. So the trick is catching the correction right before the next impulse happen. And okay, let me scale into the 30-minute time frame so we can see everything clearly. So as you can see, we had this nice play right here where the market was just going sideways right after this previous impulse. So impulse, and then we're followed by this correction right here. So we're gonna focus around these areas, but then I actually explained this in the previous video, so I'm just gonna get a quick recap. Try to play it fast so we can get to the current market. So obviously we had this structure here in the 30-minute time frame. But then if you want to know deep dive into these structures I'm touching on right now, you can go check the previous video. It will be down in the description. But yeah, same concept. We have This is our first touch, second touch, and our third touch. So if you guys can pay attention on the third touch, we actually had more confirmation by this nice double bottom to, you would have entered here, or if you had been stopping out by a close or a tight stop loss, but I would recommend for you guys to put your stop loss below all the market movement, so around these areas, so you can see that the price would have not taken you out, or you would have entered right here again. But either way, that was a nice play. And then during CPI, so this buy that you see right here highlighted was the CPI buy. That's when the market bought during CPI. And the play is very similar. As you can see, we have a correction right here, right after this impulse. So it's very similar to this overall one that I was just going through, but we're just going to skip it and get to the current market. So let's scale back up since the movement is a bit big. So one thing you should pay attention to is where the price is in relation to the whole structure that we had. So you can see when it comes to our big structure, this was the highest point, or also known as the 90% rule of this structure. Let me go to the 2-hour time frame. So you can clearly see it's the 90% rule. So if we bought, we would have had our take profits at the 90% rule, or on the way to the 90% rule, and the final take profit would be at the 90% rule. But you can see now what the market is doing. Instead of respecting this resistance or this previous high, it's actually breaking it multiple times. So that could give us two possibilities. Either the market could form a reversal correction where it is and then drop to the downside, or give us a continuation correction to the upside, since it already given us impulse, this first impulse, second impulse, and so on. So the story could be an impulse correction all the way up, or impulse and then the market starts correcting in a reversal behavior to the downside. So right now we need to discover what the market looks like right now, basically, given those two possibilities. So the first one that I'm going to do is the one that where the market is going to continue buying to the main high that I pointed out in the big time frame. So this one right here. So we're going to gun for the buy. So we need reasons for the market buying to that point. So you can see the first touch on our resistance or 90% rule. Let me just highlight it with an arrow. You can see the price really, well, the candlestick itself didn't go through it. It only gave us what we call a wick and then closed below it. So we're not really going to pay much attention to that. What we're interested in is from the point where the market was breaking that line and going across it or past it. So we're going to focus around this area. And if you look carefully, we could either use a rectangle just to get all the touches within our support. So if we pay attention to the number of touches on our support, we actually have 3 touches. So this tells us that, okay, it's aligning to our concept of a correction. We would focus more on the third touch because it has the highest probability. So this would be our key point. This whole area right here would be our key point for us to look for more reasons for a buy. Because so far, it does look like a buy. We have a nice support right here. And, we could also draw out the resistance. And we can actually hide okay, let me just make it visible from 4 hours so it must not get into our way. So you guys can see it really looks like a buy from this point, even though we crossed the 90% rule, or basically the previous high from our structure. But currently it looks more of a buy. And okay, let's get into the third touch. So this area, I'm gonna go ahead and delete it and see what we have. So when it comes to the third touch, what you would want to see is the price reach the support or the third touch itself, which is, this was basically our main third touch. So what you'd want to see from that point is the market rejecting from it. So you'd want to see reversal candlesticks. Let me just try to see if we can get reversal candlesticks. So we use this one. So you can see these are the most common one is this one, this one as well. Those are the main common ones, but you can see we have all types of reversal candlestick patterns, but the ones that we would like to see is basically the bearish pin bars. Let me see, also the bullish pin bars, and then the morning star as well. This is a very good one. Evening star in case of a sell, very good one. Yeah, basically those are the main ones. Even this one, even though it's very similar to the morning star, but here it has a different name. So all these have different names, but it's good to know how they look information. You don't really need to know their names. You just need to know, okay, that is a reversal candlestick. So also you'd want to see right after you get your reversals, say we get the morning star, we have this the last bearish candle, and then now we get our morning star right there, reversal candlestick, and then we get a change of direction, which is now a bullish candlestick. So from this bullish candlestick, we'd want to see at least 2 more bullish candlesticks. So something like this bullish candlestick will be this one, and then 2 more, and then that's when we can enter. So let's go back to our chart, zoom in, and see what we're working with when it comes to NASDAQ. So you can see the last bearish candlestick, right after it we had this what do you call this actually? Let me see which one is very similar. So it's basically, I think it's these bullish pin bars, but then it has equivalent wicks both sides. As you can see, long wick on both ends, but it looks very similar to that bullish pin. And now we have our first bullish candlestick right there. And what is key is the size of it, because the size of the candlestick will show you momentum, the strength, you understand, of the price going into that direction. Because now you can see our first bullish candlestick was you can call it a bit big, but it's not as big as the previous bearish candlesticks, especially these two, but it's up to par with the last two, this one as well. So okay, we want to say this, fine. And remember, when the 1 hour time frame, you can go all the way down to the 30-minute time frame and try to work from that point. So right now I just noticed something very important regarding those 3 bullish candlesticks that you'd want to see before you enter. So you can see this reversal candlestick that is alone right here. If you had said, okay, fine, I see this reversal candlestick, let me enter right away, and you make your your buy right there, scale up, probably a tight stop loss, because you probably think, okay, it's not gonna come back. Okay, price goes down, forms a new bullish bearish candlestick, another bearish candlestick, you're taken out, right? So that's the reason why you would want to see those bullish candlesticks forming, showing you change of direction, instead of just taking your trade based on the reversal candlestick alone, because you get reversals almost everywhere, but then for it to be valid, you would need to combine all those confluences together for you to be confident. So the third touch would be your first confluence. The price just being at this touch would be your first confluence. And then the reversal candlestick would be your second confluence. And then those 3 bullish candlesticks would be your third confluence, just showing you the change of direction and momentum. So basically, we would have ignored this first one, because what happened next was 2 bearish candlesticks. Okay, now we had this reversal right here. Let's see which one it's similar to. So it's similar to this bearish pin bar. As you can see, it's very similar. The pin bar is on top, but then usually this is a reversal candlestick pattern for a sell, but that's what it looks like. Or we could compare it to, let me see. Yeah, that's what it looks like, because the pin bar is bigger on the upper side than the lower side. But then regardless of whatever it is, it's a reversal candlestick, so we would have paid attention right after that. So what we want to see next is this bullish candlestick. Cool, we had our first bullish candlestick. And then when we zoom in, let me just zoom in, so you can see. Okay, let me zoom in further in case you are watching this on your phone. So as you can see, this first bullish candlestick, the opening of it didn't really form any significant wick. So what tells you is that the price was not indecisive. It knew where it wanted to go, so it just opened a new candlestick and bought. So there was no confusion of whether to go up or down, because the reason why you have wicks like this is when the price is confused whether to go up or down. So it's basically just going up and down during the formation of that candlestick. So that's how you get the wicks. And then this would be the first wick that would count, and then the second wick, and the third one. So from the third one, we open right after the close. But then in the bigger time frame, say you are having a setup maybe in the 2-hour time frame, 4-hour time frame, you'd only have to wait for at least 2 candlesticks. But then in the lower time frames, 3 is recommended. So this will be the first one, second one, third one, and then that's where we would enter our buy. So okay, here was the third one, scale up. And then the thing is about your stop loss, because some of you guys could say, oh my god, the amount of pips this stop loss is just ridiculous. But the point is, it's not those kind of trades where your take profit is literally 10 pips away. No, we're going for 1,000 pips or big movement. So you put your stop loss below the lowest point, which is right here. So let's zoom out and see what we have. And then we just scale up all the way. So you can see the reason why we put our stop loss below, and it might look like it's a lot of pips, but you can see when the price went back down for a nice double bottom, it tried looking for those pending orders or stop losses, but we are smart enough to put our stop loss below all the market movement to give us a bit of room to not get stopped out. So that's the reason why the price couldn't even reach it. So with this newfound information, all you have to do is take, let me just change the color. So we're still within the same support as this main one, but then I'm just doing this to illustrate this nice double bottom. So with this double bottom, what you could have done is you could have either held your first entry that you might have taken right here, or you would have entered again following the same rules at the second leg of the double bottom. So yeah, same rules comply. You can just copy and paste everything that I said about the entry points from here to here. So in this case, you would have had 2 opportunities to enter, and then you just scale up, maybe scale up to, where is it? Let me go back to the 2-hour time frame. Maybe scale up to maybe halfway or very close to the main high, the highest high of NASDAQ basically. So that is the reason why I'm advocating for the buy, because we do look like we're still in motion for a buy basically. But yeah, this looks good in my books. It meets all my criteria, requirements, or whatever. But then in a case of a sell, it could happen, but I'm in favor of the buy. So let me just erase all of this and then look at reasons why the price would sell. Okay, so let's zoom in and maybe bring back our high right there. Let's take it back to the 1-hour time frame. Let's go down. So the reason why I would sell is because if you try to scale in this movement into this movement right here, let me just highlight it. If you just try to combine these 2 movements, what you have is just the price giving you an ascending structure. So what that means is an ascending structure is a signal for, it's basically a reversal correction where the price would go up and then reverse at some point, go the opposite direction. So that's what it looks like when you combine the two plays, or the two movements, this and the rest, basically. So how to catch a sell when the market gives you such a structure. So basically what you would want to see is obviously 3 touches on your resistance, because in the case of a sell, we focus on the resistance. So we had 3 touches, and the reason why I'm not considering these two as separate touches is because when you actually follow the market itself, you would see that this is how the market actually looks like, right? That's why we count this as a collective of touches into one. So that's very important, but it takes a bit of practice, but it's something very important for you to to figure out. But then you can also use a line graph. It will eliminate one of the touch, or try to eliminate one of the touches, because you remember this one was a clear touch. Let me just scale back to, you can see the first touch was this one by a wick, and the second one. So in order for us to eliminate this touch right here, let me just highlight it, this one by this wick, we would use the line graph, and the line graph would totally erase it. As you can see, the price actually ended way below this point even. So use all these tools for you to make sure you see the real thing happening. So let's switch back, and yeah, same thing applies. Focus on the third touch being this point. So what happened at this point? So let's zoom in before we move from the 1 hour time frame. I think we would need to move, but then you can see the reversal candlestick was this wick, giving us a huge wick to the downside and upside, but then the body of the candlestick is very small, which is one of the reversal candlestick patterns. Could either be in this case it's an evening star, but then in this drawing the wicks are very small, but then the size doesn't matter. The body, the concept of the wicks is what matters. So it's basically an evening star. Let's try to see what we have in the 30-minute time frame. So in the 30-minute time frame, it's just the same candlestick, but then with a much bigger, well, it's not that big, but then it's a bit bigger to the previous one, what we have in the 1 hour time frame, but it's the same concept, still a reversal. And yeah, so what you could have done is consider that reversal, wait for a bullish movement, which was this huge bullish movement right here, which bearish. So it gives you a clue of the amount of momentum it has. And the second clue is that it has no wick at the opening, so it just opened and sold immediately, which shows you momentum, strength to the downside. And then the second candlestick in the 1 hour time frame did the same thing. It just opened and sold. So you could have entered just from the close of the second one. So basically at the opening of the third one, and same applies. Stop loss would obviously be so high, you'll put it all the way up there and then just scale down to the downside. So when it comes to scaling down in comparison to the stop loss, you can see the risk reward ratio is probably, let me see, probably 1 to 10. So it's still a huge value trade. 1 to 10 is, you know, big movement. It's the reward is 10 times the risk. So that's good. But then say if you want to minimize your risk, let's scale down to the 15-minute time frame and go back to our market price. So you can see, remember the very basics of market movement: impulse, correction, impulse. So what do we have here? We have an impulse, right? Followed by this correction. So what does that tell you? Impulse, correction, impulse. As you guys can see, so what you would have done, obviously you figure out the structure of the impulse itself. So with this one is, since we have this pullback right here, you would have had, you know, a resistance, and then because the reason why we have a resistance right there is obviously it's a pullback. So what we're hoping is for the market to come back there and give us 1, 2, 3 touches, right? That's what we would hope for in a perfect market play. But the market really didn't. Instead, it did that, right? It just inclined back to this area. So what we have to improvise, obviously, and by improvising, we just draw the resistance on the current play, which is this whole thing right here. And what this tells you is 2 things, right? It's 2 things. So basically, these 2 points give us a double top. First thing that we get from this double top. And remember, on our way to the second leg of the double top, the market got there correctively. So this whole thing is a correction. And we have this as our second touch of the correction. Obviously, this will be the third touch. And here we have the first touch. So touch number 1, touch number 3, touch number 2, touch number 3, we sell. So we focus on the third touch. Let's zoom into the third touch and see what we have. And look at what we have. A reversal candlestick. Let's go back to our patterns. So it's this one, evening star, this one right here. As you can see, wick at the bottom, wick on the top, small body. And what do we have right after the reversal candlestick? A bearish candlestick. Bearish candlestick number 1. So remember, in the smaller time frames, we would need to see at least 3 or 2 if the bodies are way big. So this first one was not that big, but then the second one was so huge and it had no wick right there, meaning when the price closes from that point, we open our sell to the downside. And the price already sold. And then when it comes to our stop loss, just hold on, we put our stop loss right above our market price right there, and we scale all the way down to, let me go back to the 30-minute time frame, all the way down to the next major low, which would be either this point or this one, so one of the two. So that's how a sell would play out, but I'm not in favor of the sell. Really not in favor of the sell. I prefer the market buying, but then obviously I don't control the market. I would have to take what the market gives me. So in case it doesn't give me that buy that I want, I would have my stop loss for me to protect my account. And you can see the price already sold a bit, but then remember, this is also within our buy from the previous setup that I explained. So when it comes to this sell, obviously this point becomes a point of interest. So what could happen from the price could just bounce off from that point and sell off, right? Or in the case of a buy, we just buy at some point, give us a correction to continue going up. So that is what we have with NASDAQ. So this is the sell setup. So let's just try to relate it with US30. So you guys can see US30, the 90% rule was broken and the price just shot up. So that's why we are in favor of the buy of NASDAQ. So that is it for today's video, in depth of NASDAQ for this week, upcoming week. Today is the 3rd of December and the market is gonna open midnight, which is gonna be the 4th. But yeah, in preparation for the market, this is what we have. So yeah, that is it for today's video. Thank you so much for watching. If you got to this point, basically, because this is damn near a 40-minute video on one setup, NASDAQ, but it's in a in-depth review of the market. Thank you guys for watching, and those who reached this point, thank you very much for watching. You guys can comment your point of interest in the video, what is still confusing you, what you want me to basically carry going. Until the next video.